Let's review income statements. So income statements are one of 4 financial statements, and it's also the first financial statement that you will prepare. So an income statement helps us find our net income. We take our revenues and we subtract our expenses to find that net income. So it's going to look something like this on the statement itself. First, you list out your revenues. So you might have service revenue as your one revenue. Then we want to list out our expenses. And let's say we have salaries, rent, and advertising expense. Then we'll take our revenues and subtract our expenses to find this net income. So let's take a look at an example. Bowman Inc. had the following revenue and expenses in April 2020. So service revenue was $150,000, advertising expense was $20,000, salaries expense $35,000, and utilities expense $25,000. We need to prepare an income statement for the month. So you'll see over on the right side of the screen, it says Bowman Inc. income statement, and then for the month ended April 30th, 2020. That's what would go up at the top of this income statement. Then we start listing out our revenues. So which revenues did we have? Well, we had service revenue, right? And that was our only revenue. So if you only have one revenue, you can list it out like this. If you had multiple, you would then also need to find your total revenue. But here, we only have one revenue, so we're good at this point. Then, after our revenues, come the expenses. Now, we have 3 different expenses here. We will want to list them out in order from greatest to least. So, first is salaries expenses, then utilities, and then advertising expense. Since we have multiple expenses, we also need our total expenses. So you'll notice that when we listed out the amounts for each individual expense, they went towards the middle of the statement. Then the total is over on the far right. We would do something similar if we had multiple revenues as well. So our total revenue was $150,000, and our total expenses were $80,000. So our net income would be $70,000. Now let's say in this example, your revenues were only $50,000 and you still had $80,000 of expenses. If that was the case, you would then have a net loss of $30,000.